Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Tuesday, July 14th. Despite a lack of leadership, stocks were able to log modest gains following upbeat earnings announcements from Goldman Sachs and Johnson & Johnson and a mixed batch of economic data. Goldman Sachs unveiled earnings of $4.93 per share for the second quarter. Excluding a one-time preferred dividend, diluted earnings came in at $5.71 per share. The consensus was pegged at $3.54 per share. Though Goldman's results were impressive, many had already expected the company to top the consensus earnings estimate. The financial sector lagged for the entire session after showing leadership the day before. Financials closed with a 0.3% loss. Pharmaceutical and healthcare products giant Johnson & Johnson reported today better than expected earnings of its own by bringing in $1.15 per share. However, the Dow component didn't provide much leadership. Healthcare stocks advanced just 0.4%. Tech stocks, which collectively carry the heaviest market weight in the S&P 500, made a modest 0.3% gain. Dell weighed on things by stating that it expects gross margins to decrease even though it expects revenue to make a slight sequential increase. Semiconductor stocks did show strength, though, ahead of the latest earnings announcement from Intel. Meanwhile, retailers climbed 1.6% in the face of mixed retail sales data. Higher gasoline and auto purchases helped retail sales for June increase 0.6%, which was more than expected. However, when excluding autos, sales increased just 0.3%, which was less than had been expected. In other economic news, the June Producer Price Index increased 1.8%. That was twice the increase that had been expected, and was also the sharpest jump since late 2007. Core PPI also increased more than expected by coming in with a 0.5% increase, which is the biggest jump since late 2008. The latest consumer price data is due tomorrow morning. Businesses continue to pare inventories amid persistently weak demand. May business inventories fell a sharper than expected 1% in what was the 9th straight monthly decline. Trading volume was low even though there were plenty of news items to act as catalysts or cues for trading. Fewer than 1 billion shares traded hands this session on the New York Stock Exchange. That's well below recent trends. I'm Jeffrey Ham for Briefing.com, and thanks for listening.